Kevin Green back with us, our senior markets correspondent, alongside Diane King-Hall. Same there as we look at a couple earnings this afternoon. Dell, Marvell continue the discussion. These are non-negligible tech names, Diane. They are right in the middle of a lot of this, particularly Dell.
Yeah, Dell certainly in focus today with their earnings. We're just on standby for those to be released. And obviously, as you mentioned, tech took that hit today that really, it seemed like in general there was this push-pull that was happening. You had optimism earlier in the session off the macro data, but then investors seemed to turn back their attention to some of the concerns over the pace of growth within the tech sector. Not so much that there's not growth, but it's not the feverish pace that we once saw. So you saw some of that cooling, but it's clear that the overall market wasn't willing to throw out the baby with the bathwater, because as you mentioned, small caps ended up being the leader for the session. And it takes me back to, yes, we're not at the highs, but you're seeing that growth, and we've been wanting to see that growth throughout this year to prove that there's overall resilience and potentially more diversity, more diverse gains to see in the future in this market through the balance of the year.
The numbers also from Lulu this afternoon should tell us how much consumers are willing to spend and what kind of style preferences they've got. Don't think it's quite as important as the other two. Ulta, that we're going to look at, a very fun, interesting stock-specific story and a very cutthroat business in makeup and beauty right now across a handful of different companies. So that's fun, too. But Dell, in terms of continuing the narrative and getting more information about AI, that's our focus, KG?
Yeah, definitely. I mean, we want to continue to see how this space is going to evolve and how a lot of these companies are going to be able to manage and try to take market share from some of the bigger leaders. Now, I think when it comes to Marvell, obviously you're talking about infrastructure, but they also have exposure to the Ethernet space as well. So we'll get an update on that. Overall, though, I mean, I think the most interesting report here today is going to be Dell. That's going to be one, and then Lululemon. Now, it does appear that Dell, there is a report that Dell is looking at selling their cybersecurity firm SecureWorks again. And so SecureWorks, their shares are halted up about 17%. That looks like that was actually just reported right after the close. So maybe we're going to get some insights into if that's actually going to occur here and what that structure looks like.
Okay. We are looking for servers to, of course, carry Dell. As we heard from our guest from Morningstar at the beginning of the show, the margin's going to be important. How much can they charge? How much can they wring out? Or how much do they just want to get their initial kind of blueprint in with these customers and get through the door, as everyone wants to be part of the server build out? So Morningstar's issue is more the potential for their margins to not impress. But for the top line, Dell still also has a bit of a undertaking as they switch from negative revenue to positive revenue trajectory. That is this quarter, essentially, continuing from the last one. So the revenue is estimated to be at $24.1 billion. That's kind of our top line number that we're looking for. And here they come. So EPS of $1.89 versus $1.71 for Dell. Nice beat there, $25 billion versus the 24, Diane. So we're off to two nice trailing beats there. What else we got?
Yeah, I mean, that looks good. So as you mentioned, the second quarter revenue came in at $25 billion. That was better than expected. ISG, that's one of the things that we were looking at ahead. That was up 38%, $11.6 billion. So that looks solid there. Client Solutions Group, we know that's a part of their, kind of the more of the traditional piece of their business. That came in at $12.4 billion. That was actually a deceleration there. That was down 4% on a year-over-year basis. But we're looking at the market reaction in the after hours. It looks like that's popping in the after hours. So it looks like the street likes what we see off initial reaction to their results, especially when you look at ISG. That was one of the verticals that investors wanted to hear more about and see more strength there.
Yeah, pretty impressive number. I guess the rumors were true that Dell is making a big stake in this server build out. That ISG Infrastructure Solutions up 38% because of the servers and networking revenue, up 80% to $7.7 billion. So, I mean, it's not going to be long before they might actually be able to eclipse the more cyclical Client Solutions Group, which is lagging and down 4% annually. I mean, market's moving because I feel like that's a pretty great number from Dell there, KG.
Yeah, they actually do break it out. The AI optimized server demand was sitting at $3.2 billion. So that's a 23% increase on a quarter-over-quarter basis. And that is $5.8 billion year to date when you're just talking about the optimized server, the AI optimized server here. Backlog also did grow to $3.8 billion. And they do believe that there's going to be multiples for backlogs here in the near term. So that's where you're seeing this growth. That's where you're getting the enthusiasm. When you're looking at the PC segment, it's still slowing. They are continuing, and they said this pretty much every single quarter that we might be at a near-term bottom there. But I don't even think the market really cares about that. They are becoming a major player when it comes to the AI space in general, and it appears that that might be a new shift for them. And if that's going to be the case, we have to look at SMCI. I know that they've been having some issues here when it comes to short reports and potentially delaying their filings. But Dell does appear like it's taking some market share, potentially taking some market share from them, and that's what the commentary right now in this report is suggesting.
Okay. As we look at the PC side too, other messages suggest maybe it finally is a bottom, whether it's Best Buy or HPQ. But to your point, Dell's been saying that for like the last year and a half, along with a lot of other companies. But just those other piece of information yesterday seemed like they could help Dell kind of at least tourniquet some of the bleeding in that particular category. All right, so look, I mean, I think this is good enough, basically, to keep the stock bid right now. It definitely helps us kind of end on a positive note for our tech story for the day. Marvell is also out. So, Diane, if you got a last thought on Dell, go for it. If not, we do have Marvell numbers, too.
Let me get into those. So, yep, they're out with their results. Revenue came in at $1.273 billion for Marvell. So that was a little bit better than expected. The expectation was for $1.25 billion for revenue. Still a decline on a year-over-year basis. Now, in terms of what EPS was for them on an adjusted basis, that was
about 30 cents.
I'm trying to find that number.
Street was looking for 29.
Yeah, so a slight beat there by a penny there. Just reading these as they cross over here. They talked about what their growth was. They talked about, the strong demand for AI is expected. I mean, that's one of the things that we're trying to pay attention to for Marvell. We're looking for more insight on the data center revenue, because that's one of the things that analysts wanted to hear more about with that. I'll let you take it from here.
Yeah, those are big numbers.
On those numbers as well.
Yeah, I got it for you. 92% data center revenue growth for Marvell. Pretty huge growth there. Pretty much the exact same message we heard from Dell. The difference, though, is do they have their bottom line and their margins cleaned up and ready to capitalize on this, KG? Because they're still operating at a GAAP loss. Those 30 cents are a big adjustment, quite significantly. And they're still forecasting GAAP loss going forward. So, should they not be improving that a little bit?
It seems like they might actually. I mean, they might be ramping up to that. And the reason why I say that, they do believe that the combined enterprise networking and carrier end markets are going to return to growth, while their data center end market obviously is already seeing growth accelerate. So if they're already seeing data center accelerate, and they've had a little bit of weakness when it comes to enterprise networking and the carrier business, and the carrier business is able to kind of see a little bit of a trough and start to ramp up there, that should actually pad the top line and then also fuel bottom line growth here. So I think that's a narrative that they're talking about in a commentary. Maybe it's not being reflected in the guidance quite yet, but I think that's very optimistic, because once again, we've seen a lot of these technology companies that have been killing it when it comes to the AI space. Dell is one we just talked about, but now this company is saying, look, we have some other verticals that might be actually seeing some bright signs here in the near future, and that's only going to be tailwinds for a company like Marvell. I think that's another reason why we're seeing the shares pop to the upside here.
A lot of similarities in the way the numbers look for Marvell and Dell. Yeah. You see the power of the data center. It's no joke. I mean, this is not a myth. This is huge amounts of demand just pouring over. So I think pretty good continuation. Some surprises here, we're so pinpointing NVIDIA that there's a little bit more potential for surprise, I think, on some of these, Diane. It's almost nice to see the knock-on effect.
It's true, and especially because when you think about kind of the OEMs and the expectation for certain kind of clients, like for instance, governmental clients, et cetera, would kind of more traditionally turn to the OEMs because they just know them. They've been in relationship with them or have relationship with them under the Client Solutions Group. So, why not meet their need within the data center group? So Dell was expected to get some benefit within that group. So yes, we've been paying attention to more of the, the NVIDIAs of the world, but it shows that there is a need for other companies in this space to meet the demand that's there.
Absolutely. It's a group effort, and that's kind of the point, is that there's a wide swath of companies still benefiting from this. So let's talk some consumer here real quick. Let's not leave out the style. Lulu at 235 at the low. Oof, not good. 247 right now. 392.9 million. Go ahead, Diane. That was their net sales.
Yeah, I mean, Lulu is under some pressure off the back of their latest results. One of the concerns coming into this report was that Lulu hasn't been able to maintain its positioning with the type of consumer it has. It has a consumer in this range of, like the millennial range, basically, and they have had issue after issue recently. They had this new release in July. They had some issues with that. So in terms of their latest results, let's go through some of the numbers. With
Outlook's a little
regard to
soft.
Second quarter, revenue came in line at $2.4 billion. Second quarter adjusted EPS was $3.15 a share. That was actually better than expected for adjusted EPS. The expectation was $2.92, but it's the road ahead, I guess, that looks concerning. Third quarter EPS, they're expecting to come in a range between $2.68 to $2.73 a share. Third quarter revenue, they're expecting that to come in between $2.34 and $2.37 billion. Now, again, they had pulled their latest leggings line back in July, so it's got some headwinds that it's dealing with because it hasn't been able to have the right product mix for a while, and their price point is higher. Yeah,
this is a tough spot for them. They previously said $10.8 billion for fiscal year revenue. Now they're saying they're only going to get to 10.5 at most. I feel like there's now something here that's even beyond just price point problems. I think it's maybe their clothes are too good. People don't have to go back and buy them. Like, they hold on pretty well. So I don't know if they're going out of style or the wardrobes are already full of it. It's too much inventory. Are they going to have to do the unthinkable and give us a discount, KG? Let's go. Slash them. Yeah. I'm there. Tell me the day.
I think that's the concern right now. If they're not able to move product, they're going to have to cut prices in order to do so. Now, they're going to have to answer to, is that the right proposition for them? There's certain brands out there that you don't want to cut prices because then it impacts them when it just comes to their brand in general, right? So I think that's going to be a little bit of a concern. When you're looking at the America's sales, they actually decreased by around 3% on a year-over-year basis. That's not something you want to see. Last quarter, they actually did tout the fact that North American sales were actually bouncing back here a little bit. International net revenue also actually increased by 29%, which was actually pretty decent. And when you're looking at the comparable sales on a year-over-year basis, they're up about 19%. But it's the guidance moving forward, and I'm not sure how they're going to be able to address that, because either, once again, you hit the value brand, or you hit the brand and try to knock it down to value, or you readjust your guidance and you try to level set with investors. Either way, it's not going to be a good look for Lulu right now.
Totally. All right. Seems like uphill battle still to go here. Maybe to some extent, Ulta as well. The charts both are stories of faded glories in retail. Got a quick closing thought for me, Diane Hamley? We got 60 seconds.
Yeah, Ulta, 5.30 for adjusted EPS. That was weaker than expected. They missed on both the top and bottom line. That was some concern. Analysts expressed some concern heading into this report. Ulta had recently caught a bid because we had that revelation that Berkshire Hathaway had taken up a stake in that. But so far, I mean, no one wants to question the Oracle of Omaha, but this latest quarter doesn't look good.
All right. Thanks, guys.